Welcome everyone to my new video presentation on Polygon price prediction for January 2024 on a market situation which is disturbed by all sorts of news correlated with the ETF on the BTC side. We do see the manipulation going out at major level on a big scale. We have a $84 billion volume for the past 24 hours, guys. This is the big deal. Now, Polygon is still trying to catch up with the volume, $569 million on the table. It's not bad, yet for the past 7 days, we are not sitting in the best shape, minus 16.7%. We would like to find out more on the charts. What's happening? Well, make sure to follow me on my YouTube channel, subscribe, check out the other price predictions, including the live trading video that I have that posted a couple of days ago. I do trade a lot basically, so you can see that in the shorts as well, a lot of the trading videos. I also have a trading going on right now on the BTC side, long $176,000, and you can, by the way, check out my trading journal, which is something you can actually participate, join my trades without any upfront fees. It's just a commission from the pure profits achieved. So it's a system based on performance, and we are trading for you in an outsourced way through API trading permission, right? So we're going to talk about those things along the way for the one-on-one coaching program at the end of the conversation. Now, what's happening on the Polygon side, guys? Well, the current situation and the charts we're considering researching will be on the 4-hour candlesticks, which is speaking about a medium-term representation. And the number one thing we care about here is obviously the upper structure of range that is existing right now in between two major levels as zones. The upper one is considered the supply, the lower one is considered our demand, which has confirmed into a strong reaction, and we're pretty much happy for that. We pretty much took out, actually, at the end of the day, the liquidity. It was a pattern of liquidity grabbing, which is usually healthy. It's just that needs time in order to play out on the reverse side. The reverse side is usually as how the cascade effect downwards looks like. That's how basically the parabolic momentum towards the upside is portrayed as an upside representation, with the ability right now to finally take our movement from the bullish convergence created. Take a look at that on the CRSI indicator and oscillator measuring the strength of the market. We did created basically a very nice representation of a real reaction towards the upside, which has been confirmed on the first leg, and this first leg generated 11%. Then obviously you came downwards, take out the liquidity, and now it's just about a question. Basically, we got a break above 200 days moving average, which would be the first target. And then I'd like to see the markets dealing with those highs. So the first resistance is going to appear somewhere around 95 cents, especially that there is a mark like that. 95 cents will be basically the first place where we're going to find ourselves in major difficulties, especially at that time we're going to trade above the volume profile of the range, which is basically the indication to appear at the moment on 85 cents. So whatever is traded above 85 cents is actually having the ability to reconfirm bullish at some point and continue the market movement back to the highs, which is slightly above the dollar mark for January. We do want to keep in mind the fact that if we lose the current demand level situated on 75 cents, we are going in trouble, as we're opening the doors for a bearish momentum domination, at least of short term, which can extend into a medium term, and that would be at least a month, basically up to a few months after under domination. So we don't want that to happen. We don't want basically to open up such doors as possibilities. Obviously, they're not confirmed by losing 75 cents, only for short term. For medium term, many of the things got to play out in bearish in order to portray as such representation, but at the moment we're still far away from that, and it's the place basically right now filled up with buying pressure. This buying pressure is only needed to be allowed to be executed in order to take the markets high back to the 95 cents, which would be basically the first major target for us towards the January. Another 15% to be printed, and then it also depends how does the ETF news are coming around BTC, as the expectancies will be as well with all coins at some points to get them ETF approved, and the things are going to things will look beautiful at the end of the day if that happens. Especially if BTC gets approved, we are going to be in a great shape. So the dollar mark as well sits on a possible target for January, but after we retrace basically from 95 back to the volume profile, which is right there, and then you can expect basically the dollar or slightly above the dollar mark in order to be touching that. This is what we are actually portraying and visualizing for January, and this is with the most probabilities existing, guys. Now, for those of you that would like to participate in my trades in a done-for-you format, make sure to check out my trading journal. All the links are in the description area and comments area for everything, including basically the one-on-one coaching page for anyone that is serious about this business. If you consider that there is room for financial freedom and you would like to achieve that, then this is the place to learn how to trade professionally and be basically under a mentorship program one-on-one with me live, where I'll take you by hand and teach you how to do that properly. We're talking about a person that's been trading full-time since 2014 and is performing such activities out of passion. So you want to check this video out and see how does it work. Register now for more information and join on board, guys. Have a good time.